All right, welcome to The Explainer. Today we're diving into a really radical, kind of wild idea. What if we just got rid of every single tax? I'm talking income tax, sales tax, the whole shebang. And what if we replaced it all with just one?
No, seriously, just think about that for a second. Imagine never, ever paying income tax again. No more chunks taken out of your paycheck before you even see it. No more scrambling to fill out complicated forms. You get to keep 100% of what you earn. I mean, that sounds incredible, right? So, what's the catch? What would actually take its place?
Well, the answer is a concept called the expenditure tax. And the idea behind it is, honestly, it's super simple. The government would just stop taxing you on what you earn, and instead, it would only tax you on what you spend. So the whole focus of the tax system flips, right? It goes from taxing your income to taxing your consumption.
Okay, so one tax to rule them all. It sounds almost too good to be true, doesn't it? I mean, how could one single tax possibly be enough to replace literally everything else?
So here's the fundamental principle. It's all about the difference between your income and your spending. Think about it. Your salary, any profits your business makes, even the money you sock away in savings or investments, none of that would get taxed. It's all yours, untouched. The tax only, and I mean only, kicks in at the moment you decide to actually spend that money on something.
All right, so we get the what of it, but what about the how? I mean, how on earth would a country actually implement something this huge? Let's get into the mechanics of it.
Okay, so it's basically a two-step revolution. Step one, you just abolish the entire current system. We're talking income tax, corporate tax, GST, TDS, all of it, just gone, wiped clean. And then comes step two, you roll out the new system. A single fixed percentage that gets applied only at the very end, when you're actually spending your money. So whether you're buying a car or just a cup of coffee, that's the one and only place you're getting taxed.
So why would anyone go through all that chaos? Well, the people who support this idea argue that the potential upsides are absolutely massive. Let's take a look at the case for making this switch.
You can see why people get excited about this. First off, simplicity, right? One tax, one set of rules. Easy. Then, it's a huge boost for savings. If your savings and investments aren't taxed, you're obviously encouraged to save more. The system literally rewards you for it. It's also super transparent. No more hidden taxes baked into prices. You'd see exactly what you're paying. And, at least in theory, it could be more fair. Someone buying a super expensive luxury car is going to pay a ton of tax on that one item, while the person just buying their weekly groceries pays way less.
But, of course, it's never that easy, is it? For every pro, there's a con. And there are some really major challenges and risks here that critics are, very quick to bring up. So let's flip the coin and look at the case against an expenditure tax. Yep, this is where the beautiful, simple idea really slams into messy reality. The number one fear? Revenue risk. Governments need a stable flow of cash to run things, right? But what happens when there's a recession and people clutch their wallets and stop spending? Poof! The government's income could just plummet. Then there's tax evasion. I mean, how do you possibly track every cash deal happening in a huge informal economy? It seems almost impossible. And maybe the biggest worry of all, to replace all the other taxes, this one single tax rate would have to be pretty high. And if it's too high, it could make everyday essentials incredibly expensive, which would be a huge burden for middle-class families. Okay, so we've got this really compelling idea on one hand, and some super serious dangers on the other. But you know what? This isn't just a thought experiment. Let's see what's happened in the real world when places have actually tried something like this. So the track record is, well, it's mixed. You've got Sri Lanka, which gave it a shot but found the administration was just too challenging and ended up scrapping the whole thing. But then you look at some Gulf countries. They don't have income tax and they rely heavily on consumption-based taxes. And even in the US, a very similar concept called the fair tax keeps popping up in debates, so the idea clearly has some staying power. And that really gets to the heart of it, doesn't it? The quote kind of says it all. Super simple and transparent, but also very risky for a developing country. The idea looks amazing on paper, so simple, so clear, but when you're talking about a huge country that absolutely needs a reliable stream of revenue, the risks of it all going sideways are just massive.
So if a country were to even think about trying this, there are a couple of things that would be absolutely non-negotiable for it to have a prayer of succeeding. First, you'd need some seriously powerful digital tracking for pretty much every single transaction to stop people from just avoiding the tax. And second, you would have to build in protections for essential things like food and healthcare. Maybe they're exempt or have a much lower rate, so you don't end up hurting the families who can least afford it.
So that leaves us with the big question, right? Is the expenditure tax a brilliant, simple solution for a complex world? Or is it a massive, high-stakes gamble that could throw an entire economy into chaos? I guess in the end, the answer really depends on one thing: how willing a country is to bet the house on a complete revolution.